All right, good morning. It's game 42 of the 2026 season. Lots to do. One of those things is not to panic. So yesterday, at least for me, it was one of the bigger down days I've had in the last couple months. We haven't had many down days, the fam, in the last couple months, so that's going to happen. And it's always a good reminder that I need to get better. So every single day, all day, that's what I think about doing. And if you ever take it um, too critically when I'm saying that you can get better, then just think about the expectations I have for myself. I also this morning in the early look use an excellent new book. I shouldn't say excellent, a good enough new book called The Emergent Mind. Okay, so again, this is tying the machine's decision-making process to the patterns of behavior and decision-making of human beings, of course. Now, what I say is that I much prefer like to have on my payroll like a bunch of ants, like insects, than hedge fund analysts or certainly sell side analysts from the old wall with this current market structure. Because again, ants seem to be smart enough to know the shorter way around an obstacle to the path, like the alpha path, the place to get to, than most human beings. And it's okay. Most of your performance problems, certainly mine, are because I don't make an objective rules-based decision fast enough. Well, I'm going to wait for it to bounce, or then I'm going to go to a conference and talk about how software is overdone. Okay, now it's a big momentum unwind. Just come on, just get on to the next path, right? You ever hear of pheromones? That pheromones? The big rig here. Bennett doesn't have pheromones. Ants, you know what they do? They secrete them and then they follow them. That's how they follow the path. Think about it. The signal, pheromones. Good morning, Bennett.
Keith, ants also do a lot of work underneath the surface. They build a little mound up top and then a big catacomb of ant trails in the bottom. Anyway, with that being said, Keith, I'm going to pass the baton to Daniel. We're getting ready for marketing tomorrow, and that's it.
All right, Daniel, we got your place. I mean, I should have mentioned this. I mean, Asia was a certified shit show last night, just because it went vertical. I mean, I'd said this enough times. South Korea had gone up 27% in a month, so then it went down 12% in a day, and it's kind of back to where it was. It is back to where it was a month ago. So I wasn't buying that up there. Obviously, I was looking for names that you covered to add to. One would be Pepsi, and one would be Philip Morris. So again, when people are like, "Oh, the great unwind," it's like they're not unwinding Pepsi and Philip Morris. It's just that you don't own enough of it, right? That's the difference. Like we live in an environment. I don't want to get into a few good men, but we live in a world where we do live in a world where people are dominated by the index weights. I didn't tell them they had to do that. That's just how they run their process. So I don't have to do that. I'm happy to own 5 times more Philip Morris or Pepsi for that matter than Microsoft and Nvidia right now.
And I think they have some catalysts too. Both of them, Pepsi, we're looking for sequentially improving trends in the volumes for some in the snack division particularly, and then Philip Morris. When the FDA authorizes their moist pouch, I think that's going to be sort of a game changer, and IQOS is later down the line too. So they do have catalysts as well as a very steady businesses, right? Like people aren't really changing their consumption patterns based on what's happening. Overseas.
Oh, I mean, if anything, they're stressed and they're eating more Doritos and they're consuming more shit that those two companies make. I'm a big user of Zins. I wouldn't call it healthy.
Well, it's not as unhealthy as nicotine used to be. That's the big difference, right? So it's rate of change, right? So if you're a smoker and you switch, you're putting years of your life back on. So
yeah, and stepping in a pile of shit with your shoes on isn't as bad as if you're barefoot. I mean, again, we're like, it's back to the point on index weighting. We get the relative game. We have a business. Sam's in, good luck to Sam with that. I mean, he's got to beat the S&P 500. My job is to not step in shit with my shoes or bare feet on. Like I need to save and make money. If I need to have a 10% position in Philip Morris, I can take it. I don't have to give a rat's ass about the 8 or 9% index weight that Nvidia has. That's another person's job. My job is to define my job and to execute on this process. So if you're at home and you're doing this on your own, a self-directed basis because you've already fired your advisor, You know, how many of your advisors even know where the move index is, never mind what it's telling them? Like, you got to fire their ass. They don't know what they're doing, right? I mean, these people have no idea what they're doing, but you're going to trust your hard earned capital with them. If you're with me, we're all in it together, right? Bielsi's stuck with me, no matter, well, he can leave, but I mean, this is where we're at. And as long as he's in the seat, then I'm going to have good ideas like Philip Morris and Pepsi. So let's make, if you had to pick one of those two, because both are signaling buy, like right now, which one would you pick?
Um, it's like picking children. PM. We'll go with PM.
I pick children. It's Callie's birthday today. I prefer
Happy
Callie.
birthday.
Yeah.
Happy birthday.
So,
Well, I got a new idea too, Keith.
Sorry, you said PEP or PM?
PM.
PM.
Just because the catalysts are closer.
All right. Jack already went to school, so I can say Callie. Okay. Good. Let's make that first of the top 5 most actionable. What else we got?
And so we have a new name for the long list. It was on before. We're putting it back on Murphy USA, MUSA. So, I don't like this one as much as Casey's General Stores, the business model or everything, but the environment that oil is in benefits them. And this is actually what sort of a perfect environment for their oil. And what I mean by that is, gasoline prices have risen 11 cents in a broad chart overnight, right, to $3.11 nationally. Some people are saying it's going to go up 30 cents by the end of the week because of the turmoil in the Middle East. So, that's good for them. Their costs, what they're selling, customers, didn't go up by that much, right? So that they're making that spread, and they benefit from this volatility because they make that spread earlier than their costs went up, and then on the way down, they can lower the prices slower than their actual costs have been lower. And then anyway, where they're getting the oil from MidCon, it's not affected by this, right? It's all domestically produced, so. They're benefiting from the higher prices, and they don't have to sell it as high. And their business model depends on this more than like Casey, because they have this real estate strategy where they want you to come to the store because of the lower prices, and they don't have as good of a business inside the store. Whereas Casey's, they generate 70% of their transactions don't have gas associated with it on the ticket, so they don't need it as much. Whereas Murphy does, and that means that's not as good of a business in my mind, but this environment benefits that's actually the sort of the ideal environment for them. So I'm adding that back to the long list. Keith, I think you're mute.
What's the ticker on that one again? MU.
Sam Adam.
MUSA. Yeah, I hear you. I go with Casey's instead. Casey's been phenomenal. I mean, how many? Yeah. When the golf course is open, guys, come on, guys. And most of you are guys. Are you long Casey and Philip Morris, CASY, or are you long NVIDIA and Tesla? Be honest. Let's have an open and honest relationship here. And thanks to everybody joining the call this morning for free, because this is what you're going to get. All right. So we got two ideas that have been great on a relative and absolute basis. We don't have to go to a conference and whine about picking bottoms in software, which is a very stinky business, picking bottoms business. Jenkins.
Hey, good morning, Keith. Just wanted to follow up on Viking yesterday, since we didn't have the conference call in hand. But just a quick note on that, and then I had one other follow up with it too. Because they don't disclose, at least in their financials every single month or every single quarter, their hedging strategy essentially for fuel. They did disclose yesterday, just because fuel as a percent of OPEX is much smaller than peers, it doesn't move the needle to the bottom line as much as it does for the big 3 cruisers. But they did suggest yesterday that a significant portion, if not all, of their river segment's fuel is already hedged for the year ahead. So basically 50% of their business is not going to be subject to volatility around the fuel side. But I would call out that based on the quarter, and not just the quarter itself, but how they performed over the last year plus, excluding fuel, so net cruise costs ex fuel, continue to come in below our expectations. And you're really seeing nice operating leverage. There's a couple things going on here. You have sort of legacy initiatives and efficiency, but there's also some targeted productivity investments. And it does help that, revenue is as strong as it is, and it's driven by pricing. So the flow through on that incremental pricing continues to be really strong. What I'm seeing in the follow-up to the quarter is, again, analysts raising numbers and raising price targets, as I had outlined in our preview of what I'd expect to happen. But I think what's going to happen here over the next couple of months with this one in particular is people are just going to realize that the pricing power, which people were questioning and have over the last number of quarters, why is it as strong as it is? Why is it as strong as it is? And I think it comes down to the execution, but also kind of the customer base that they have, much more tied to you're less macro. I mean, obviously they're macro sensitive like any consumer discretionary stock is, but their core demographic in addressable market, be it, wealthy or retirees, continues to grow well in excess of industry supply. So it gives them, that pricing power advantage over the broader travel industry, which obviously is highly competitive, and competing with, people that are more susceptible to changes in their underlying income and things of that nature. So it's the customer, but it's also the execution. And of course, it's the quality of product that continues to score really well. So seeing numbers move higher, I think they're not going to move high enough. Out of the cruise space, obviously, it's hard to, be pounding the table this morning or yesterday. But on Viking in particular, I think it's one that you can own through the volatility. And that's what I am communicating to customers. So numbers moving higher on the back of, forward booking curves looking solid, and our pricing survey continuing to validate what is an outperformer across the travel landscape, not just cruise, but travel broadly. And that's Viking, VIK.
Yeah, it held trend. Trade actually got above trade yesterday. It was up on the day in a down market. Anything else?
No, that's it. Just wanted to flag that. I got some other earnings that are wrapping up. Good to see Lottomatica have some follow through after being, having the overhang of the online gaming sector. But that one's still working through some stuff. But it's good to see the reaction has been positive because numbers were good and the year ahead looks pretty solid for them. But that's it.
Yep. And Quad 3. Quad 3 doesn't like that sector stuff.
Certainly not.
All right. And when are you coming back from London?
I will be here the whole week, and then I'll be back next Monday. Doing the rounds here. I love our London clients. Got a good Hedgeye following over here.
Tell them Mucker says hello.
Oh, they love their Mucker.
Tell them I got ants in my pants this morning. All right. McGough, what do you think, man? Are you going to get displaced by an ant colony or what?
No McGough today, Keith.
Oh,
he's traveling to Toronto, so you're stuck with me.
He's out.
Yeah.
He had an update in Warby yesterday. He had to leave.
Yeah, Warby's had a few good days now following the print last week, but we're still very much in the heart of earnings season, so I want to touch on a few names here that reported after the close yesterday and before pre-market this morning. So the first being BBWI, which is Bath and Body Works. This is an active long of ours. It has signal strength, and the company beat across all metrics this morning. So revenue came in well above where the consensus estimates were and well above where management had guided towards. And while it was a top line rate of change deceleration, and that is what management is continuing to guide to, we think that the catalyst calendar is very ripe to get the top line accelerating again. And we think sequentially throughout 2026, it will accelerate. So what's driving that is first the Amazon store. Bath and Body Works just launched their first Amazon storefront, which is a good way to drive e-commerce. And that happened in the first quarter. It was targeted to be in the first half. So it came in a little bit ahead of where management had guided towards in terms of timing. And then secondly, we think in the back half of this year, you're going to get a white label business where this company starts making candles and products for a retailer like Target. And we think that'll be another top line driver for this company. Another thing with Bath and Body Works that's important to note is they have virtually no tariff exposure. All of production is done in Ohio. So that's another more defensive setup for this stock in terms of the tariffs. And then it's just a very high quality business. We think it's fundamentally undervalued. Has 4 times operating asset turns at a 16% EBIT margin, which is very, very rare in retail. You'll see sometimes a company will have one or the other, but it's hard to get both at the same time, which is one of the reasons that we think BBWI is just fundamentally mispriced, and it's been working. It has the signal strength. We see the Pod 1 acceleration coming through 2026, so we continue to really like that one on the long side. So I'll let you ask any questions if you have them now, and then I'll move on. All right,
Man,
I think we're on mute.
no, I was on mute there. Just a compliment. You're getting really good, man. That was tight. Like we've had for those of you who've been on our team for 5, 10, in some cases, McGough, for God's sakes, I've had to work with that guy for almost 20 years. Just keep it tight like he just did. I mean, that's excellent, right? You don't have to, like, on our team, rookies play. He's not a rookie anymore, but I mean, tighten it up. Don't go through. Go tell Bennett next time he tells me about the 50 different things that you could, that are inside of every ingredient on something he's analyzing. Like, we don't need that part. We just need to do what you just did. So everyone can get better, and that's, I guess, concise. Being concise is a skill of yours. What else you got?
So we also had Ross Stores. They reported last night after the close, delivered a 9% comp versus street expectations for a 5% comp,
Holy
which was
shit, that
mainly,
thing was ripping. I mean, I
yeah.
think people overthought that, right? Like, oh, everybody's long it. Yeah, they should have been long it, evidently.
Yeah, we've stayed with the active long here. It still has signal strength. The pod one rate of change is accelerating, just accelerated 200 basis points this quarter and has sequentially throughout the entire year. Management guided to a 7 to 8% comp. Management's generally very conservative with the guide, although that did come in well above the 4% consensus estimate for comp in the first quarter. We think it keeps accelerating. We like off price. We think it's taking share from the department stores, which we actually just went short over the weekend. We had Dillard's, which is a signal strength active short of ours now, worth calling out. But yeah, just pod one acceleration, really strong comps, signal strength. We continue to lean long on Ross Stores as well.
Yeah, that is phenomenal. Put that one in the top 5 most actionable and put beside it in your notebooks, do not chase. But again, this is a quad 3 move. You can back test it, Ian. I'm sure we'll see this if he does. But quad 3, what happens as a consumer is that their discretionary income goes down, right? The gas price goes up, the money left over goes down. So you do more off price than you do whatever, Gucci handbag buying. So that's the trade. That's again, if you just need to boil it down to, like, you could explain it to your dog type stuff. That's where we're at with stuff like that. Anything else?
Just quickly on Adidas, they pre-announced results, so nothing shocking out of the quarter. The guidance, however, was really weak. We see this company missing throughout the entire fiscal year as Nike's really stepping on the accelerator with bringing out more products. So under Elliott Hill, Nike's doing a product platform every 13 weeks as opposed to under Donahoe's once every 52 weeks. So just getting product back out into the market, not hemorrhaging $5 billion of sales every year. That's a pressure to Adidas, obviously, and we continue to lean on that one on the short side as well. And then that's everything.
Yeah, the point on Ross too is, when I had this back and forth with Sam and RPK on this, like, momentum is a factor exposure. Right? It's the number one factor instead of pheromones. For the ants, it's 1 month price momentum if you work at a pod shop. Okay, so again, that's what it is. That's what people have to follow. That's why I built my whole process and signaling system on front running that, because I used to work there. Okay, so 1 month price momentum is a thing, but not all things are the same. Not every captain hedge fund manager on the planet who's trying to pick a bottom in software isn't long Ross Stores. Okay, Ross Stores is going to maintain its price momentum today. Your job as a portfolio manager is to own things that build price momentum, because those are the things that go up. Okay, it's also to understand when things get absolutely crowded and the whole fucking street owns what you own. Okay, so again, that's when the trail changes. And that's, that there. If you tell me that the whole world's not long, like Seagate or Western Digital or SanDisk, I'll be like laughing at you. All of tech had to go there because they couldn't be anywhere else that they owned, because they're blowing everything up. They're blowing bag 7 to software up. So, you go to other sectors, you go to other stocks. Yeah, it's not that hard. We have 95 different signal strength stocks on the list. Buy that list. If you don't pay for that list, I have no idea what you're doing. All right. Thank you. Let's know Tom today. I don't see
No,
Emily.
he's.
Emily. What do you think about pheromones? What do you think about pheromones?
I think the advent of technology, where you can talk to people without being in their presence, and you can, date without going to a bar, is proves that pheromones are real, and all you have to do is look at the fertility charts to know that. Is that the answer you wanted, Keith?
Well, I don't look to you to give me answers that I expect. I mean, no.
I think it's like a really understudied area. And it's not for this call, but I have a number of theories on it. So, all right. Just a note. What?
Pheromones?
Yeah.
Oh, I didn't know that.
Oh yeah. This is I've been fascinated by this since high school.
Okay.
Uh,
I just
okay.
learned. I just learned about it like yesterday when I was
What are you reading? What are you reading?
The Emergent Mind.
Oh, yeah. Okay. I need to read that.
I mean, I know what ants are, but I didn't know shit about pheromones and ants. I mean, I didn't. That's
Yeah.
why.
Well, so have you been? If you go to the Caribbean, like Belize, or Guatemala, and
No, thank you, Belize. No, I haven't been there.
okay, and hike in the jungle, it's of course filled with ants, right? They're everywhere. And you just watching what they do is like the freakiest thing in the world. It's like, how do they know? Well, they
Well,
know because
they know because they get fractals. Ants do
yeah,
fractals. Hedge fund
ants
analysts
do
and sell side analysts do linear programming.
ants are fractals. Okay, on the linear programming front at 10, Andrew Friedman's going to join me, and we're going to be talking about the political situation in artificial intelligence. There is a lot of money at stake, obviously, so everyone wants to tune in and understand where this is going, or where it is, first of all, because the narratives could be very misleading, and where it's going. That's the first thing. That's 10 o'clock Eastern. And then the second thing I want to mention is Moderna's taking another potentially another little hit to its cash position. It agreed to settle a patent lawsuit over the delivery system of the Moderna vaccine. How much they pay is dependent on a disposition of a question before the Court of Appeals. So we'll have to see. But they're now estimating they'll end the year with, I think, 4.5 to 5 billion in cash. They still don't make any. The one thing they make that generates revenue is a COVID vaccine, which is now, of course, being constrained by policy in its administration. So that is it. I hope to see everybody at 10 o'clock.
All right. Thank you. Is the bomber back or we got Coop?
Josh is still out. I think he's out for the rest of this week because he's over in London as well.
Oh, really? Really? We got two senior partners out there. Oy, oy, oy.
Yep, lucky them.
Not lucky me. That's a factor exposure, that I don't. I said I wouldn't go to London right now. I mean, God bless them, and I pray for them. But everything seems to be blown out of proportion, obviously, on the Western media front in terms of what's actually going on in the Middle East. London, of course, isn't that, but there are plenty of. There's plenty of Middle Eastern risk exposures in London. Go there. Anyway, that's a digression, but something that's been on my mind. Hopefully, our guys are, stay safe over there. What do you got?
Yeah. Well, actually, there was a New York Times report that came out earlier this morning that stated that Iran had made indirect contact with the U.S. to negotiate an end, but that was pretty much, I guess, faded by markets. I think Trump said yesterday that it's too late for talks, and the market kind of futures popped up a little bit, but kind of sold back off, and yields are still going up in the short term from here. Obviously, still bearish trend across the curve, and interestingly, MBA mortgage applications came in this morning, and they were up 11% from last week. Obviously, that's backward looking, but that was when mortgage rates were down below 6% and yields were kind of coming down. Obviously, since Monday or since the weekend, those have pretty much gone straight up, but still, I guess, trending downwards, right? But
The nowcast, I go through all this in the early look. I mean, yes, all that happened, and at some point the war will end. It's just like a government shutdown. So again, at some point oil will stop going up. That was good for us yesterday. At some point gold stops going down, which started happening this morning because bond yields stopped going up at the top end of the range. To Coop's point, that's where they went. Okay, they didn't go bullish trend. In fact, nobody's going to talk about Japanese government bond yields breaking trade and trend this morning, so I just did, and that's all I have to say about that till the macro show. But I mean, you have global bond yields are fading right where they should. Okay, so that's a huge buy signal on rate sensitivity, i.e., TLT, gold, the two biggest positions that I have on that front, and I also added utilities, as you saw yesterday, to the macro book alongside Norway. You ever been to Norway?
I haven't been in Norway, no, but looks like a great place to visit.
Yeah, it's a new long at Hedgeye. All right, anything on this Equifax move? I don't know. I know what's going on in the financials. They're like software stocks. They went down so fast that a bunch of hedge funds do what they do. They short them after they go down, and now they're still constantly covering and getting squeezed. But that's short term, which gets us more sell signals, right? Things like I mean, you have so many shorts that have bounced. But is there anything in Equifax in particular that would be a catalyst that I should be concerned about on the long, of people getting long it instead of just covering shorts?
I mean, not particularly. They're kind of at risk with the rest of the bureaus, just in terms of sentiment. I think that like from a fundamental standpoint, they are still strong businesses and they're still really integrated with all of the like ratings basically, or ratings for credit. And so, I think it's a lot of just kind of noise still, and we're waiting to see anything material coming out of that.
Yeah, I mean, I think that they're going to be a secular loser. Ratings agencies that started in '08 for me. With more information, more technology, replacing old wall and credit agencies and credit ratings that are backward looking. But and the signal says there's something about that in there, right? I mean, that's partly why they've sold off due to quote unquote AI concerns, correct?
Yeah, it's true. And I think there is kind of the whole try merge buy merge debate with regard to the bureaus still. That's there's just a lot of noise, I guess, is the answer to that.
Yeah. Well, I like noise. Noise. That's what I built the risk range signal for, to simplify the complexity of the noise.
Yeah. And then just one last thing I wanted to flag. We're starting to roll out coverage of the housing sector here. We've kind of done a lot of the top-down research for quite some time, doing housing themes calls and the calls with Ed Pinto, but haven't had any of the fundamental bottom-up research on any individual equities. And so we're kicking that off. I know we're generally pretty constructive on our intermediate to longer term view on housing. I know you sold ITB yesterday, but probably a result of the spike in yields. But with the curve kind of coming down, trending downwards, we're relatively positive in the housing space. And one of the first name that we're going to be rolling out research on is Open Door, and they're going through a big transformation here. They have a new CEO that started back in September, and kind of reshifted the entire board, and they're changing their business model. We're pretty cognizant that the near-term outlook is still bearish. We're still waiting on some confirmation for what Kaz, who's the CEO, is what he's doing. We're waiting. We know his plan, we know his ambitions, but and we're pretty positive on the fundamental outlook of the company. But we're just waiting for a little bit more results, and then the signal also to really pound the table on this on the long side. But we're doing a presentation next Wednesday at 12:30 p.m. and we're gonna kind of just outline our thoughts and walk through the fundamental thesis for the company.
Good. Yeah, that's a bearish trend signal on that, and on ITB. Open is Open Doors signal. The why on that doesn't really matter, right? Like, I mean, but I can tell you why. I mean, to Coop's point, bond yields shocked, housing stocks back to bearish trend. When something breaks trend, it's called a stop loss. I sell it all. I don't go call Coop and say, hey, are we still fundamentally bullish on housing potentially here and all the work you've done in Open Door? No, I don't give a shit. I mean, I follow the ants in front of me. I don't get too smart, right? I'm smart enough to just follow the pheromones. Okay, so that's what I'm doing. Housing, don't forget, is a high beta U.S. equity position. When U.S. equity beta, i.e. the S&P 500 breaks trend like it did yesterday, and it's still only neutral this morning, it's just above it. That's not good for a lot of things, okay? So especially things that are going down because they go down faster when gamma is negative and the S&P's trend's negative. Immediate-term trade momentum is negative anyway, which actually matters more than the trend in this day and age. So that's it. Right? Get over it. Like, oh, but you should be. No, as a younger man, I would be long housing because fundamentally we're getting more bullish. We have a view that bond yields are falling. But no, I'll wait until the signal gives me the green light, and then I'll follow the ants. Okay? That's it. I'd prefer to be long Norway. Again, if I want to have a 2% position in something, starter position in something, or a minimum position in something, would I have a bearish trend breakdown in ITB or a bullish trend breakout in Norway? I go with Norway. Never been there. Heard it's great. All right, thanks. Jay.
I've been to Norway, and the fjords are Sound of Music beautiful, and it's really nice. I guess I'm at the airport because we're doing. No, I'm fine. We have a couple things I'll just flag. Most important I want to flag is that we got truck orders. So one of the things we've been talking about is that emissions regulations and the pre-buy will dominate now that EPA 27 is back on. So basically, those came in a lot ahead of where I think people would have expected, up 67% year over year over the last 3 months, and another great, strong truck order up. The actual month is up 159% year over year, but that's an easy compare because that's kind of when we pushed it. We did our HVAC deck yesterday and building products. Looking across that space, I think there's a lot there, a lot to go through. There are a refrigerant change is really the biggest change in HVAC, and those orders are going to start to improve through the second quarter. So we're probably like a little early on that from a fundamental standpoint. I think the signal kind of got us off the bench there and into play, but those should really work, I think, through the summer. I actually got a lot of good inbounds on that. And then on Tesla, this is probably worth noting is that Tesla loses Toyota and Stellantis from its CO2 pool. So Tesla makes a lot of money selling emissions credits. And while the One Big Beautiful Bill, I think, got a lot of attention for pulling the $7,500 EV tax credit, what it did is also very impactful to Tesla's overall. Just you're seeing these emissions credits go away, and that's going to take hundreds of millions or potentially over some number of years, billions of dollars out of Tesla's P&L, and that's it's a big part of kind of why the thing works to some extent as a stock, is that they get all of these more subtle subsidies, and these are going away, which is sort of the impactful thing. One, people just don't need them. Like Stellantis can make its own electric cars now, and that's most. Toyota also makes, of course, its own electric cars. So these are, sort of the long arc of this is always going to kind of crash into some economic realities and some CapEx realities in the industry. A lot of excess capacity. No one needs your emissions credits. No one cares anymore about your emission credits. And that's, I think, a sort of structural hurdle, while Tesla's sales are still under a lot of pressure with basically brand and competition, all these other problems that are going on with it. I will leave it there and go get on my flight. But yeah, if people are interested in the HVAC deck or building products, let us know.
Yeah, as we signaled, Tesla right on time, back to bearish trend, trade and trend. It's making and signaling lower lows on a trending basis. So Let's put Tesla in the top 5 most actionable short side. If you want other ways to be short Tesla, I'm short Dan Ives, A-Ives. Ticker is Ives, I-V-E-S. That's been great. Mags, Mag, which should, I'm trying to get the company to rename it Bags. Jay, they didn't respond. MAGS, that ETF, short that. There's so many different ways to make money out there right now. So many people are still long Tesla. I mean, just wait till golf season opens. They're all going to be whining and complaining about it. The story has changed entirely. All right. There was a time when he was going to fly to Mars, I think, right, Jay? Amongst other things. But now he just tweets.
I think the idea that Dan Ives dresses from the Crayola Spring Collection is very funny. I don't think anybody else thinks that's funny, but I think it's very funny.
I mean, Dan Ives has been in trouble with the securities cops. He's been in, you get a lot of issues. But if you want a circus clown at the circus at CNBC, you get one to dress like one. I think he's done a great job marketing himself, and I'm short him in real terms. All right, good flight to you. Got Tesla. I always like putting Tesla in the top 5 most actionable on bounces. You want to be buying puts and shorting the stock. Don't short it when it's down. That's when you cover some. Okay, you're gonna learn how to do this, right? You don't need to pay somebody $2.20 to do it improperly. Right? You prefer to be aligned with the ants. All right, Fernando.
Morning, Keith. More of the same over the past couple of days. Just more bombings. Supposedly an LNG tanker was taken out in the Mediterranean of all places by a drone. And despite that, we are actually seeing a compression in U.S. natural gas prices and European, the TTF benchmark, over the past day. But overall, it's led to a very big spike. I spoke to RPK yesterday. LNG is a minor beneficiary here. Probably some of the majors, Shell, Exxon, BP, who have large LNG trading portfolios, get to benefit here. The caveat being that especially Shell and Exxon have exposure to Qatar Energy, which has also shut down some of their production. Our overall view still is you're better off buying the U.S.-centric producers like Diamondback and Matador. It was a down day yesterday for them. The spread between Brent and WTI is also widening, meaning the U.S. producers that get paid on WTI are making less than the outside producers. So you could look at someone like Petrobras, for example, as someone who benefits from higher Brent prices. But overall, the exposure is still pretty good. Still a lot of gains. And no easy solutions. I mean, President Trump yesterday announced he's going to backstop insurance for tankers to keep energy flowing out of the Gulf. It's been done before. The transit through the Gulf will still be slow. You're basically going through with no transponder on at night to try to get through the defenses. Some folks will definitely try to do this, but you'll be at a significantly higher cost and a much more challenging endeavor. The chart here is just showing, again, Brent WTI at a much slower pace than TTF to natural gas to Henry Hub differentials here, just to show you again, just that spread that's widening here, why LNG traders tend to benefit more, while oil, everyone benefits, the U.S. producers included. Keith, you still there?
One spot on my road that's got a dead spot. All right. All right. That it?
That's it.
Thank you.
Keith, no Freebird this morning. You've got me today.
Man, I just almost hit the 3rd pothole in a row. Every time I call on you, I come up on it at the third day in a row, hitting the same pothole. But like an ant, I figured out a better path. I went around it. See how smart I am?
Yeah, I mean, it's like hopefully you learn, right? If you make the same mistake a couple times, you hope to get better.
That's why I'm
I've
not going to
got-
talk to. I think from now on, I'm not talking to Felix or Freebird. I'm just going to go to you or Jose because
Okay.
I'm going to get to the answer faster. I'm an ant. That's where I want to be.
Right. I just get to the point, right? Like, just on that, yeah, we've got some news on Meta today. They signed a multi-year AI content deal with News Corp, the parent of the Wall Street Journal, and some other news outlets and publications. The deal will last for a minimum of 3 years, and Meta will pay the company up to $50 million a year. News Corp was at, I think, Morgan Stanley TMT yesterday, and they were sort of alluding to this, and then the news sort of broke later in the day.
Yeah, you got to give it to some of the guys before you make it news, right? You got to do it that way, right?
Well, they didn't say at the conference like, "Hey, it's coming out tonight," but they were, like, "Hey, we're going to announce a big deal soon."
Yeah, I'm sure their employees, their executives weren't leaking it like last week or for a couple of days. I'm sure it was all all above board at Morgan Stanley's conference. I'm sure.
Yeah, well, it's yeah, you know how it goes, but
Well, actually, a lot of people listening to the call for free this week know, but they didn't know that. Like they don't. So many people in this world wake up every day, Oliver, to being in a disadvantaged position relative to the elites. That's fully loaded with the establishment, the old wall, their economists, their corporate executives. Everyone knows that. Everyone knows that. On the Call is the only media place you're going to listen to every day or content platform where we're going to call all these fuckers out. I mean, there's no like there is an America that remains that is a meritocracy. Like there is a playing field that we want to play on that is played by the rules. We believe in the rule of law. We believe in the securities regulations. Like, and we can still win not having to cheat. There are so many more people that want to be part of that path. I mean, let's just imagine that you're one of the many people that share my religions. You're probably up for that, right? I mean, I shall not lie, cheat, or steal, or tolerate those who do. I mean, it's on the freaking rock outside of West Point for the cadets. I mean, come on. So that's not a rant. That's a thing. And, your sector is loaded with inside information's, leaking. And people should understand that. And now they should go short Meta at the top end of the risk range because that's what gets it there. The news that everybody chases after the elites get theirs. It's how you play the game.
Yeah, I mean that's one of the things the signal, is really helpful for, right? Is it sort of tells you what the market knows before you know, and you don't know the reason until after the fact. But it's a good thing to have. It's a good tool in the toolkit. I just want to talk a little bit about the takeaways for us just on this deal, but I think it's another proof point that, AI models themselves, there's while they're really good, there is an inherent value in the data and content, and traditional media companies are going to be able to capitalize this on models as models continue to ramp up. And I think it's a little bit similar to how OpenAI's Sora licensed content from Disney. Roblox is going out and licensing content from movie studios and other games companies for IP at a company level, and then distributing it to their users, right? So even though the models and the content creation tools are really good, you still need IP. You still need things that people actually want to use, and so your content isn't just like AI slop, right? So that's what I think the takeaway is for Meta. Yeah.
I think it's going to be like an ongoing debate where the one of the best parts about Wall Street is on the buy side in particular, as you know, is that they're extremely intelligent human beings. You're talking away from professional sports, the highest compensated human beings on the planet, right? So they're compensated to generate this thing called alpha. Now, some are smart enough to know that they don't know, so they acquire inside information and get really rich on that until they get caught. Not many people have lately, so that's what pisses people off. But on the people that like the better balance of people, which are the people we do business with, to be clear, if there's a criminal on the other side of the phone, we're not going to do business with them. And I've called multiple criminals out over the years, and they've all been revealed with 100% batting average. That includes guys like Raj Radharatnam. That includes Sam Bankman-Fried for both communities of hedge funds and crypto experts. Who didn't that coming? I mean, actually, anybody who was in the hedge fund business knew what Raj was doing or his guys. But anyway, the thing about the intelligence level on the buy side is that the discussion on what AI is ultimately going to mean, right, becomes very, very relevant every day in your life. Is it not? Like every day you have to debate this. You have to go through different points. You have to go through different lines of thinking. Is that correct?
Yeah. No, Andrew and I are talking about it with each other and with clients every day.
Every day, all day. That's what's going on, right? Now, just because you're super intelligent and you're tasked to do that and handsomely paid to do so, doesn't mean you're going to get the answer. And by the way, if you do get so lucky to get the answer before everybody else, the market may not pay you for that answer by knowing it too early. There are so many components to this machine structure, Oliver, that are so different than when I was in your seat. When I was in your seat at your age, all I had to do was have what we call edge. Informational edge. Then they made it illegal. It's called Reg FD. The best edge being I go meet with the company, he tells me what's going to happen, and then I buy the stock. I mean, that's pretty easy. Even I can do that. That doesn't require intelligence. It requires some street smarts in the one-on-one conversations. But then they regulated that. Then the information edge became expert networks. Then they regulated that. Gerson learned, you would maybe not know this firm, but everyone, as long as Gerson was saying it in the expert network, then everybody could trade it. Now the edge is actually on the edge of fractal mathematics. It's on the edge of cloud computing. It's on the edge of everything that they support as what they want to buy ultimately that is AI, which is really different for the analysts like you that's growing up in this shitstorm, because there's so many colliding factors of the way that the job used to be done and then the way the job will be done successfully. So that's where I'm at. I'm really excited about it. I think that it's probably the best time to be a young analyst on a good team that gets it. And it's probably the worst time to be a young analyst working for a dinosaur from the old wall.
Yeah, I mean, the thing I would say is I don't know what it was like to be an analyst 16 years ago, right? This is the only world I know. And so it's just kind of dealing with it and just getting better and moving forward. So Keith, the only other thing I'd flag is that, Dario, the CEO of Anthropic, was at Morgan Stanley yesterday. He was pretty bullish, as he should be, just given how Claude and Anthropic are doing recently. One of the sort of themes I would flag is that just Anthropic, they're seeing exponential gains in performance. So if software gets killed today, that probably would be my guess is what gets cited for doing it. Yeah, so I'll leave it there.
Yeah, I love that answer, man. You do the job that you're tasked with today. You're the ant. I like I said, I prefer you and an ant than some hedge fund guy that's asking us the same question as the other 10 hedge fund guys who works for an old wall guy, and they're mostly guys, right? And that's a problem too. So that's our edge. That's welcome to Hedgeye, everybody. This morning, I've done a little platform, I guess. Just talking about the difference. I mean, that's what we're doing here. All right, appreciate it. What do we got on the tech front? Is it Jose or is it Felix this morning?
Hey, let me mention SE. We're not involved, but every single sell side analyst has a buy rating on C Limited.
Really?
So what
Still?
happened? Yeah.
Is that allowed? After stocks get cut in half and twice, everyone could still tell you that it's a buy?
This is a humongous company, and then everyone just gets drinking the Kool-Aid from management every time.
Chinese management? Or is it a U.S. management?
Forrest is I don't know, Singaporean potentially. I don't know. So, but look, the company blew up again. This time in huge fashion. Let's go through some exciting numbers, Keith. The company guided to close to zero EBITDA growth for Shopee this year. Basically, they said they don't think Shopee EBITDA should be lower than last year. The problem, the street was expecting 55% EBITDA growth. Okay, ouch.
Just outside on the rate of change corner. Just outside.
We're the only bear analysts really on C, and we were modeling 23%. They're coming in pretty much at zero this year. Streets at 55.
Holy shit.
That is humongous. That is why the stock tanked 17% yesterday on the news. As a reminder, we shorted
on the lows. It was more than that. Like when I was talking about, I think it was down like 25%.
Exactly. It got low as like 25 or 27%. I mean, this is what happens when people are expecting 55% growth and you deliver zero. I think we shorted this right at the top at 195 back in September 2025, warning investors that the best times are over. Today it is at $87. Again, amazing to me. There is still no downgrades on this company. Everyone thinks this is a great company. There's so much in a firestorm right now. I don't know why people are so optimistic, but they
must be a big banking client to Wall Street if the company's that big still, right?
Well, they're getting smaller. Let me see what's the market cap these days.
No, but there's the only answer on why the old wall would keep a buy on a stock is banking. There's no, like when you report zero, I mean, that's just like, it's embarrassing, right? And people
put it to neutral. Yeah, they won't put a sell rating on it, but they can, downgrade it to neutral. That's what old wall does.
That's borderline fraudulent, right? Like, I hate to use that word because then I might have to incur some legal fees, but whatever. I mean, everyone else in the world's watching, right? Like everybody knows that everybody knows. Like Wall Street is in the pump and dump business of selling you stock, and their banks and their ratings are all bullshit, and all CNBC does every day is use that bullshit as their wallpaper, right? It's toilet paper. It's complete bullshit. Thank God for it, by the way, or we wouldn't be able to fade it. If all these guys weren't bullish on C, Felix, we wouldn't have been able to make money on the short side.
Yeah, it was a big call for us and a big money maker on the short side. Yeah, so we'll present our C work and TikTok update later this month, but I just wanted to call out that one. It definitely was the worst performer in an ugly day yesterday. That's it.
Yeah, so I put that top 5 most actionable. Quickly on Nvidia. So Nvidia, since it did what you thought they'd do. Problem being that everybody else, whether they didn't know what you knew because you model it. Like Drawdown Josh Brown doesn't have a model on Nvidia. You have an 11-factor, correct me if I'm wrong, multi-factor model that nailed the numbers. But that notwithstanding, like from here, man, like is the market signal suggesting that they're going to have a rate of change slowdown? I'm not talking about expectations. I'm talking about rate of change slowdown in revenue growth for the next foreseeable future. Is that why it broke trend? I mean, it has to get back above 186 now to get recaptured to trend. And the problem is that the top end of the range is right around that number. That's a very dangerous spot to have like a 5% position in NVIDIA, never mind the index weight, which is north of 8.
Yeah, I'm gonna be data dependent. I mean, we do have our 11-factor model, and we update it every month now for clients. Currently for this coming quarter, which ends in April, it will show an acceleration in revenue growth from 73 to 82. But I think, there is some hesitation on what's to come for the rest of the fiscal year for NVIDIA. It's still going to be a monster year. I mean, if we're right on how we're tracking Blackwell, Rubin, and what they say on Glock later on at GTC. But supposedly, they're going to grow 70% this year, if my numbers are right, for the whole year. That's incredible for the biggest company in the world. And valuation, if you even care, is still only 20 times ish. So it's, to me, it's it's very attractive for value and growth. But don't forget who their customers are. Half of their customers are hyperscalers. And if hyperscaler spend or hyperscaler sentiment turns, AI turns, yeah, they're going to get impacted as well. But Keith, so I mentioned, I think last week, I'm going to this huge conference 2 weeks from now. There's a big spotlight on their conference. It's called GTC in San Jose.
Yep.
There's always some enthusiasm on what they're going to say in terms of new product releases and new collaborations and partnerships. So I wouldn't be surprised if NVIDIA gets an uptick ahead of that.
All right.
So
I mean,
just want to
that would be
mention that. Yeah.
the stock routinely trades within its risk range, but again, that is the setup. It's bearish trade, bearish trend. If it gets above 186, it goes back to bullish trend, and that's it. I mean, just stay with the rules-based process. You're going to do way better than overthinking it. If you need to overthink it, then call Felix, because he can go through 11 different factors in a real model on what drives the business and what does not, versus consensus versus expectations, etc. So there's that. Put NVIDIA in the top 5 most actionable, just with all that in there, fully loaded with the risk range. No Paul today. Thanks, Felix. No Paul today.
I'm on.
Oh,
I'm on.
okay. I thought you sent me an email saying you weren't on.
Yeah. No, I know, wishful thinking, but I made it on. But I won't be too complicated, hopefully. So there's been a push on the Hill to, get the FCC to, approve the Nexstar Tegna deal. A lot of the Republicans pushing it, and the, letters to Chairman Carr at the FCC, et cetera. And I think the FCC, particularly because Trump endorsed the deal, the Nexstar Tegna merger, that the FCC and probably the DOJ will go forward and approve it. But again, you run into the same problem, which is that there's a 39% national audience reach ownership cap, and this would violate that. So we may get some news and that there's progress toward getting this deal approved, but this is where you get the problem, which is always, I think a lot of folks on the street don't appreciate where that line is between what an executive agency can do and what it cannot do. That was part of the whole problem with IEEPA, why it took people so long to realize that those tariffs were probably not legal. They finally got there, but after months of litigation that, we spotted early on that there was a problem there. And now we have a huge refund issue and subsequent tariff questions. And same thing's going to happen here. Even if that deal is approved and the market, appreciates the impact of all that, and the scale would be very good for that combined entity. And for other local broadcast, companies, if they can expand that way, they're going to run into a legal problem in litigation against it, based on a statutory cap. They'll say it's not, but I think it probably is, and we'll have a fight over that. So it may have a bounce when this deal is approved, but I think the backside of this is makes it very cloudy that they can get this deal done in the absence of legislation to change the cap. So. I think that's how this thing is probably going to play out. And again, there's a increasing push from some of the Hill Republicans for the FCC to approve this deal and raise the cap, but it probably can't do that legally, and that'll be the next fight, with respect to this deal. So that's it for me.
All right. Thank you, JT. Another day in the life.
Another day in the life. I wishful thinking on the Glencher part. That was me, not you. Keith, obviously there's no end in sight right now. A couple of good signs out of the Gulf, though, is that we did destroy most of the Navy yesterday, if I'm not mistaken. There were like 9 ships destroyed over the weekend, and I believe 17 more, which goes back to what Fernando and others have been talking about in the Straits of Hormuz. There still is the risk, as Smithson pointed out.
That's all they got?
I think there are probably more, but there are probably more, and I think the risk comes. I think it was one of the U.S. admirals said that we're close to completely decimating the Navy. So I think the fear is when we talked to Smithson yesterday, are either smaller ships or the little zodiacs that can go out there and drop a number of mines in the water. And again, one of the things he pointed out to us was that the minesweepers that we used to be plentiful are not as plentiful these days. So that's a risk out there. I don't think anyone's talking about. We're keeping an eye on that, and I think Smithson and McCausland are doing that.
Yeah,
as well.
It's just like generally to me, it's just I don't know if the word isn't surprise, because I personally have had no edge like everyone else that's a macro expert or perceives himself to be or is perceived to be by the old wall and its media, who's now officially a Middle Eastern expert for the week. I don't know shit about it. Like, I don't know anything about it. I mean, I'm just the guy that's long oil and related equities, but like I had no idea how bad these Iranians were in terms of, like, I know how bad people they are, but I don't know how bad their military edifice was. I mean, it's fucking embarrassing. Like, you guys,
the regime,
the amount of things they've shot into the air and done absolutely nothing with. I mean, you know, I could think of like 5 different strategies if I was put in their seat that I would have a more effective, you know, at least. I'm not going to say what I'm going to say because I don't want to give them any ideas. But the fact of the matter is that these guys are fucking idiots. I mean, and they're bad people and they're dumb. There are very few combinations in this world that, you know, that are worse than that. But I don't like, this isn't going to go on and on and on. I mean, if this is the world's scariest thing, like these guys, yeah, you don't have that much to be worried about in the next 2 to 3 weeks once this is over.
Yeah, and that's actually we tried to focus a little bit on that yesterday. What happens afterward? What does it do to the region, and maybe stabilizing the region once this is over with? And plenty of opportunity there that we could get to when the time comes. But back to the one other development potentially today is they may elect the mullahs and the regime may elect a new leader today. So look for that. There was this.
God.
I know. And by the way, he could be elected and taken out within an hour. Or I mean, this is how effective the campaign has been.
Yeah, this is like watching Squid Games. We get 80 clerics in a room with bucks, and it's like, who do we elect to be the mullah? And then bang, he gets shot in the head. Okay, who wants to do it again? It's like, this is like so bad, right?
Yeah, but Khamenei's son is still out there and potentially a successor. So we'll watch for that today. The other thing we're watching is this debate shifts to Capitol Hill a bit, Keith, and this is a bunch of noise, but it is relevant. There will be a vote today in the Senate on the War Powers Act, which will try to block Trump from additional strikes in Iran in the region, and it's likely going to fail. There will be a similar one in the House tomorrow, which will likely fail. Even if they pass, Keith, these are symbolic, but not a good sign if you're in the middle of a campaign, by the way. But they're symbolic. They could be vetoed, and you have to overturn that veto. So at some point, though, Trump and the administration is going to have to go back to Congress for supplemental defense funds. This stuff costs money. We've hit, I think, 2,000 targets over the last 4 or 5 days, not a small number. And so, you know, our munitions are depleted. We will need to reinforce that. And as McCausland and Smithson and others have pointed out, this is the largest deployment we've had since 2003 in the Gulf. That costs money. So at some point, you're going to have to get back to Congress. I think that's where the debate will rage in the coming weeks. But right now, we'll focus on next steps. No plans for another flash call. We've had 2. Catch the replays if you can, but we're on alert should there be a major development.
Good. And our signals will be on high alert 24 hours a day. All right. That's the way the machine works. And God willing, we're on the right side of a lot more moves to come. Thanks for joining the call.